Hey everybody, this is Richard. So we just got into a short trade on the futures side. That's this guy right over here. We also are already in an option spread. That's from over here on this chart. And so this trade is seen on Paladin, and it's a spread trade. So we sold the in this case we sold actually the 40.20, and we bought the 39.95. So 5 points above what you see here. And every once in a while we have to do that. If the market moves really quickly against us like it did here, then in order to get the minimum fill requirement, we'll just bump it up by 5 points so that we can do that a little bit easier. We had to do that on this one. It hopefully won't make a difference with the day, but we'll have to see. Now this one though, we are wanting the market to just sell off a bit more. And but right now the algorithm still thinks that we're in either a strong down or a weak down. And until we get kind of the forward slash like you did over here, then that's what the algorithm thinks will be happening today. And so it still thinks that we're going to be selling off. Now this could change though, and in fact on this candle it could, and if it does, then this short position will just start trying to get out. Now if the market just keeps selling off, then it'll stay in this kind of strong down state. Other than that though, I don't have a lot more to add. It's pretty common when the market goes lower like this, we'll have fewer option trades, and then what we're hoping for is that this day trade will eventually get in, which it did. So right now we're short the market, and we'll just see how it goes. So I'll stop talking, I'll fast forward the video when I do the editing. So now's a good time to do the risk disclosure. So keep in mind that past performance is not indicative of future performance. Trading futures and options involves substantial risk of loss. It's not appropriate for all investors. And remember, I'm not a CTA. I'm what's called a third-party trading system developer. And so we offer the algorithms under a letter of direction. Now as the day goes on, the market continues to sell off. Right now the algorithm is up about $400, and then pretty quickly it hits another low where it's going to be up about $1,300. Now this algorithm still thinks that the market is in a strong down state, and that's evident because there's no forward slash. You just see the bright red, and there's no forward slash there. That means that it's in a strong down. Now the gain that we saw, which is going to be about a $1,300 gain, is dampened a little bit by this options algorithm that we were in. So because we took the option trade, this G1 1000 option spread trade, we took a loss of about $989 on that one. So we'll just round to 1,000. So we're actually up about 340 on the day. So we lose about 1,000 on the option, and we gain about 1,300 on the futures, and so that can be fairly common. So the day though was actually really good considering that the market was selling off so strongly, as you can see on this chart in the top left. We still ended up being able to eke out some gains, and so overall a pretty good day. It would have been nice if the options wouldn't have triggered, because then we would have had a full $1,300 gain on the short. But it's good that we caught the short. It's good that the algorithm was doing the right thing, that it saw that we were in a strong down. And I know a lot of you are probably asking, well, if this one thinks you're in a strong down, why would you do the spread trade, which is a bullish position? And that's because these algorithms operate independently, these strategies do. You can think of it as a way of diversifying a bit, so that it does happen on occasion that one might think the market's going lower, the other one might think that the market could be going higher. And when that happens, it'll just take both trades, and then as the day goes on, that could change. In other words, we could have gotten out of the futures trade really, if the market would have rallied or even just stabilized a bit, it might have gotten out. And if that would have happened, we still would have been in the long option, or the short option, which is a long kind of bullish position. All right, so I think that covers what I wanted to talk about though. This was a shorter video. Thank you for watching, and have a great day. Bye-bye.